markets, see where everything's at the moment. And so let me go ahead and give you your current market wrap. I'll get my screen share up here in a minute, just getting it all running for you. And I'm also looking at a potential gold trade, so to sort of, putting the pieces together. I don't know if we're going to get it on in time. But I'm looking on down at gold. Last time I checked there, we were moving in the right direction. And that direction was up. So let me see if it looks like it might. No, it looks like it's starting to move on back down. So too bad. We were going to look at a potential long. But with all the movement going on, we might just have to back on out of that. Let me get a little bit more detail on my chart. Like I said, computers decided to do a fun little, you gotta love those Windows updates, right? And did a reboot, knew there was a pending update, but did not think about it happening here in the next few minutes. So, anyways, I'm looking over at an intraday chart at the moment, and going down to a 5-minute gold chart, using my handy Thinkorswim app. We got to move down right now. We're at 1245.8 on gold. And if I log on over, I'm going to check out my Nadex platform. By the way, if you don't have a Nadex account, hop on over to tfnn.com. On the top right side of the page, what you're going to see there is a Nadex banner. I want you to click on that Nadex banner, and then at the top menu, you'll see nadex.com. You'll see that there is a link right there for trading, and click on Demo Trading Account. From that, you'll click on, and I'm looking a couple things up while we're going. You'll just fill in your username, first name, last name, phone number, email address, all that fun stuff, and you can get your demo account set up, and you can trade along with us on some of these trades that we try to do right here on the show. So let's see. Like I said, we only got a few minutes left on the trade. And I'm trying to pull it up to see if we're going to be able to get in fast enough, but we might just miss the cutoff for gold. But that doesn't mean that we're out. We just got to look for some other trades, see if we can find one today. All right, so it's like Assistant's finally decided to come back online, and I'll have room there for you in just a second, and I'll show you what I was looking at. Okay? And but let's pull it up and get it going. So I was like from one hosting issue to another. There we go. Okay, yep, I'm back, coming in, and booting up. So I apologize for all the technical, that's live right there. That's when you got live radio. Doesn't matter who you are, doesn't matter how long you've been doing it. It happens, and you just gotta, go with the flow and figure out how to make it happen. Okay, so let's see, Hotcom's up. I'm in Hotcom. Gotta love the Tiger's Den, by the way. If you don't have access to it, you can log in the Tiger's Den. Not only do you get access to Tiger TV, but you also get access to talk to other traders and see some of the traders that we're placing, what's going on in there as well. So, okay, so that gives us one piece. Let's get another piece. Let's put TFNN back up there. Let's go on over. Let's show you how to get into that Nadex account. Okay, click that Nadex banner. Go to Trading Demo Trading Account, get that set up. Once you got that set up, go to Open an Account for free, get that set up, and you're all set. From there, you can log into your account. Let me log in real quick, and I'm getting on in here. Okay, so I got a short hedge left on my trades, but had some nice oil moves going on this morning. Let me go ahead and I'll open that oil chart up for you. I can't believe it completely rebooted even my Ninja for me. That's nice. Right when it rebooted. So, what I was looking at over here, I was actually on a gold chart. Where's that gold chart? There we go. And I was focused in on the Diagnostic chart here. We had plenty of volume spikes going on today, but I wasn't pulling back on those volume spikes, which is okay. So if it did, it probably would have lost. The gold was just moving down, down, down. And I was looking for a potential pullback right there close to the end of the expiration here at 130. But we didn't quite get the setup in time to be able to put the pieces together. But we'll try to get some more trades going for you, okay? And here's where we were at. I was looking at this. It's starting to move up, and I was like, we might get a trade going into this final 30 minutes. But this whole bar literally just went up and came down and stayed right in that one range. Right, when we get back, I'm up, I'm running, and we'll get this show on the road. Thank you so much for your patience, and let's see what we can make happen in the next half hour. We'll be right back. All right, welcome on back here to the Diagnostic Trading Hour. So going through, we're just trying to see if we can potentially put together a trade setup. Just had a nice P2 boomerang reversal there off oil, but that was a little bit earlier in the hour. And it's moving on down right now. Let me go ahead and add in my close-to-close ranges as well on the expected ranges here. And let's see, we'll update that. Go over here, change this to close-to-close. Now I can see what the expected close to the next close will be, like what range it'll stay within. And once we have that, we can get ideas on a variety of trades. See, it's already pulled up after going down a little bit, pulling on back up. We actually had moved the expected range, less a few ticks on the hour right here. Let's see what it does here the next few ticks to see if we get a potential setup. No volume spikes at the moment, but we are coming off a pretty nice downtrend off the oil inventory report. It really shot down there and stayed down pretty well down to the 91.60 range, and then kept on basically pulling on down, but it's finally pulled its way on back up to 92. And I don't think it's going to move that much lower. It's really just oscillating, as you can see, sort of created its own little support line right here at the, what level? -1 deviation level. So it was able to bust through it. However, let's see, we'll just move that up here, get it out of the way. Let me grab that. I think I can grab it, or I'll just shrink it. There we go. That worked too. Yeah, we've now moved the expected movement high to low on the hour. But I just wanted to point out we had this -1 deviation level, came down, busted through it, but didn't bust through it with volume. Notice how we have a massive amount of volume. We have more than expected on volume, in fact. All right, but it moves the expected move. I mean, almost within just a few ticks past the expected move. If I zoom in on that hour right there, we can see, it just barely came below it. But notice the price action, the volume didn't really pick up. We got like the initial oil inventory release. We got some more volume out of that. A lot of take profits is what's happening right there. And then everybody firing off their orders this late to the game. And notice how the volume itself, the trend is dropping. Okay, right there in the volume. I'm looking at 10-minute volume right here. But notice how the trend is dropping on the volume. We get a little bit of an uptick going in on volume, but it's like a down bar, up bar, down bar, so that really tells us nothing. Then we go on over here, we got down bar, up bar, down bar again. That volume tells us a whole lot of nothing. So basically what it tells us is, if anything, chop. Expect it to stay within the range, probably within inside the close to closes for the next couple hours there, when you get that mixed volume message where volume's rising, but you don't see price action reflecting it. So we saw like no commitment to the upside when this reversal happened, because it went up and then closed down and volume declined. So looking at those patterns on just increasing and decreasing volume, especially the big focus that I use when I'm looking at things like magnet prices, volume pattern recognition, I'm looking at 10-minute bars. Just like Tommy O'Brien talks about in his book, The Art of Timing the Trade. 10-minute bars. He's taught that a lot. I've learned a lot of that just co-hosting the Bull Bear Binary Hour with him. It's very helpful if you can go in and add in the actual trend of the volume. Is something that I've learned to adapt and add on to the magnet pricing models. But right there, so right there, even notice we have declining volume, no real commitment to the downside. Market does make one last dip, but the trend is done, and that's evident by the declining volume. And then, like I said, I'm just trying to really make sure this is clear for you. Close down, close up, close down. Volume increases on the up, decreases on the down. And keeps decreasing back on the up. Just chop. So if you combine the two together, if you see the chop in the price action, you see the chop in the volume, that's a good indication of, guess what? Chop, right? So what can you do if you see that? It's like, well, that's great, Daryl. Okay, so now you showed me a good way to see the chops happening, within 15 minutes. So, right, you got 3 5-minute bars, looking at the 10-minute rolling averages there. So what does that mean to me? How can I use that? What can I do with it? Well, what it basically means to you is it means that you can now look at a neutral trade. You could look at a butterfly or potentially even an iron condor trade to do on the market. And that would literally be the best way to take advantage of it for that hour. It pops up a little bit, you get a little bit nervous, but guess what? Down close, up close, down close. Volume up and volume declines. Exact same pattern. Look what happens right after it. Chop. Okay? We go over here. We get increasing volume. We got down close, up close, down close. A little bit more volume on the down close, but again, it was the opposite direction. Guess what? We got chop. Okay? Now, we go into this last hour, this most recent hour. Let's see if anything changed. We got up close, up close, up close, up close with increasing volume. Okay? May or may not be a great trade to go long on, but I want you to see the difference in the pattern of the price action. Now we do see the volume dropping, and then we see the volume increasing again. You know, sort of a little bit right there, not massive, but a little bit up move on that. But we get, what do we have? We have, you know, multiple up closes followed by multiple down closes, but the volume was confirming it. Okay? So if I was going in on that trade and I was looking at, you know, maybe a P1 trade where it's breaking out, and I looked at a classic boomerang, a pullback on the market, you know, I got exceeding volume, it goes the opposite direction, it breaks the low, and we just had a pattern of consistent up move followed by a consistent down move versus a chop pattern. That gives me a lot more confidence in taking that trade to the downside, because a lot more often you'll see that. Whereas if you don't see the volume going at least with the initial trend, you often won't see a pull. When it does decide to pull back and go the other way, you often won't see that nice little trend on the way back down, even if it's not with increasing volume. Volume did decrease a little bit, but it increased back. But again, notice smooth trend and definite clear uptrend in volume. So you can go through, you can look for that and see, you know, how often do you see that pattern. And, you know, it's pretty sweet. You start putting it together, and you see the reversals start, you know, forming and, you know, putting all the pieces. Let's see if we can find some other examples. But where we see, like, you know, basically four closes in the same direction with increasing volume, and then at least 2 closes in the opposite direction. And often that will be with decreasing volume. So you don't get 4. Okay, there's 4 closes. 1, 2, 3, 4, increasing volume. And we didn't get 2 closes in the opposite direction. Just went flat on us. Trying to get, okay, 4 up, but we don't have increasing volume. But notice still on this one, even with 4 consistent up closes, we did get a follow-up with a down close. And that did have increasing volume the entire way. So a great P1 trade right there. Early P1 entry. Going back, just trying to see if I can bring something to you today that you can walk away and use tomorrow. Let's see here, or maybe even later today. Got an increasing up volume, didn't get 2 down closes, so just went into chop. So looking for like those 4 closes in a row in the same direction, and I'm just looking at 5-minute bars, nothing special. Okay, just looking at volume, and now the expectations and stuff obviously bring everything into perspective. The expected, you know, ranges bring things into perspective. But all right, so we got increasing volume to the downside, multiple closes right here. So here's a very similar setup. Okay, you got 4, you actually have 5 bars in a row. You get 2 up closes, even with decreasing volume. Okay, right there, and notice how you get a nice uptrend. So that's the setup I'm looking for. I'm not saying it happens constantly, but when it does happen, it's usually pretty nice. There you go. Here's another one. You got increasing volume. Okay, you got multiple closes in the same direction. 2 up closes in a row. And that one actually had increasing volume the entire time, and look how it flew up. So really, really cool, simple setup. And, you know, I'm not, like I said, they're not everywhere, but, you know, those are more dojis than anything. Let's see here. Just trying to find as many examples as I can for you. We're not just doji in it. There we go. Yeah, only 1 up close, only 1 up close. See, went chop. Which, again, how do you use that? You know, you see all those down closes, then you see up close, down close, chop indication. So, you know, that sort of, you know, you start noticing just the simplicity of some of these patterns, and it can be pretty amazing. That looks like a down close. Let's see, what is that? Open, close, 1976, 1970, like 1 tick, basically a doji. But notice we did not have increasing volume with the 4 bars in a row. We got barely 2 down. I mean, it's basically 2 dojis in a row, but still, even if I didn't want to like try to make an excuse for the dojis, we did not have increasing volume. We go over here, you got volume up, but again, we don't have 2 closes in a row till back here where the volume was declining by the time it happened. Here we go. We got some down closes happening right there. even some dojis in that process, okay? But look what happens. We have up closes going on, increased volume, and then we get 2 clear up closes happening at the same time, and look what the market does. So it's pretty cool. Hopefully this will be something that will capture your interest a little bit, and sort of a little bonus system for you there, and one that's really simple to trade. And I do like to see those up closes exceeding like the increasing volume exceeding volume, not just being volume in and of itself as well. So you'll notice every time before the 5 bars is up, we were exceeding volume. Okay, on each one of those examples. And let's see here. So we got volume. We basically had like one up. Like we didn't increase volume till here. See, notice how only on the last bar did it exceed volume, which is good. But we weren't increasing in volume during that time. So it was like higher, lower, lower, higher. Now it did go up a little bit, but it wasn't that increasing volume, and it wasn't like growing into a point where it accumulated and built that momentum up there till it finally pops and flips and turns around. Let's see here. Nope, not there. Okay, so here, let's look at this one. So technically that one is increasing volume. We got doji up, 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 down, down. That one doesn't work out for us. Not too bad though. So far we've reviewed like 6 or 7 trades, had 1 trade not meet the criteria, like not work. And I mean, you can just keep going back and looking at these over and over again, but it's one simple system, and there's a lot of ways to apply it. So, if you're applying it on Nadex, how could you apply this system? Well, you could go in, you could use the spreads. Spreads are one of my favorite things to trade on oil. I love trading spreads on oil. I'll throw 40 plus contracts on at a time, and you go in there because I mean oil just moves. It moves fast. It'll move 50 cents. It's no big deal. Well, what is 50 cents? 50 cents is $50. I go in there. I put a trade on. I'm risking 20 cents, $20. I put up 40 contracts. I'm risking $800. Thing moves 20 cents. I'm up $800. Thing moves 50 cents. I'm up. What is that? Like a couple grand. So it moves $1. I mean you're rolling, right? So, I mean, you go in there, and, I mean, you trade it with some size, and you can make some pretty good money on it because it will move so, like, it's a massive mover. And the premium, maybe it'll be 5 ticks away, maybe 20 ticks away, maybe 10 ticks away. But, I mean, I'll even go in there with 15, sometimes 16, 17, 18, 20 cents sometimes. I don't want to really go more than 20, but I'll go in with sometimes 20 cents break-even distance on it just because I'm like, the thing can move so far. And okay, if it moves 20 cents, I'm break even. Past that, I'm making some cash. And it's just a sweet way to trade oil, not having to worry about it. If you do 10 contracts, I'd say 20 cents of risk on a contract. That would be like $200 risk. That's like having a 20-cent stop loss if you did just 10 of them. It's like having a 20-cent stop loss on an oil future. $200, but you have no stop loss. It can go against you as much as it wants to. 20 cents, 40 cents, $1, $1.50, and it doesn't hurt. And that's what we talked about yesterday. We were going in, and we were talking about the spreads. And on the spreads, let me see here if I can pull this up for you. Yeah, there it is. I got that PowerPoint from yesterday I was going through. And let me get back to the normal view on this thing. I'll open up the slideshow. We walked through what is a Nadex spread and how to avoid this scenario using a Nadex spread. And I went through and I taught you yesterday, how do the spreads work? They're, buy or sell them. And they got much better leverage than futures, stock, Forex, options. I showed how they have, the same or better pricing as a simple Black-Scholes model, looking at the same S&P E-mini options versus the US 500 spreads on a Friday, when they both have the same expiration time and same strike there. And I talked about every single tick is worth $1. The spread is just the difference in the floor and the ceiling. And you basically can't make any additional money past the, ceiling if you're buying. You can't lose any additional money past the ceiling if you're selling. And you can't make any additional money below the floor if you're selling. Can't lose any additional money below the floor if you're buying. So all that looked really good. We got all that down. Talked talked about how they have new spreads coming out. They start at 8 a.m., so 8, 9, 10, 11, 12, 1, 2, 3. So it's depending upon, what, or I guess 2 o'clock is the latest spread I think that's released. And as far as in the afternoon, and then they start back up at 6 on FX. They start at 3 or like at 10 or something on Nikkei, and then like at 3 a.m. on DAX and FTSE, and then at 8 a.m. on most of the commodities and the U.S. indices. And so we'll wrap that up, too, with the comparison that we were going into yesterday. What if we compare the spread versus the Forex pair of the future? And how would the trade have worked out? All right, y'all stay there. I'll be right back after this. All right, folks, we'll come on back here to the Diagnostic trading area. So oil did move on down, as we talked about there about, 15, 20 minutes ago. Moved down. Actually, not only did it move to the expected move, it actually surpassed the expected move on the hour, the expected range, and but it went down to the low of the expected range. And looks like it's going to close just a few ticks off of the expected close to close on the hour. So notice when we had that pattern, we did not have so much the choppiness going on. We had the clear up. That you didn't know about. Okay, it would have been nice to take advantage of. There's a couple ways you might have taken advantage of that, but, probably you just would have sat back and not done anything. But when you got the exceeding volume and you have the increasing volume, notice the combination, exceeding and increasing volume, and the market is rising consistently with 4, ideally 5 bars in a row on the same direction of the close. And then that follows by 2 bars closing in the same direction. Enter when that next bar's low is broken. You go short, targeting usually the other side of the channel. Okay, so in this case it would be the low of the channel. It could be even going into the next hour, depending upon when that happens. Okay, and so it goes on down. You're targeting it. It hits it. You get out. You did it on a spread. I mean, you could choose a 2. You could choose a 230 if you wanted to. Just depends upon whatever the best spread is. One thing I definitely condone. I was looking at spreads this morning on the oil inventory report. And I noticed when I pulled it up, I was like, oh, that's not bad. Okay, and I got an 11 o'clock for, it was like, I want to say $5 or $6 risk. But then I looked down at 12 o'clock, $6 risk. And then at 2 o'clock, $6. I'm like, well, wow, okay, well, forget the 11 o'clock. And so you always, that's the big thing I love about the scanner is I was in such a rush to make my trade that if I was not looking at the scanner, I would have taken that 11 a.m. I would have taken the one that gave me more time. And it would have cost me money. So it's a very, very good thing that I did take the 12 o'clock and on the trade because I was fading. I was going long on the market, and if I would have taken the 11 o'clock, I would have basically not had the chance to let it bounce back up and recapture that. It wasn't a massively profitable trade at all, but I mean it would have ended down here versus like up over here. I got out, and it could save your bacon. So, I mean, obviously, if you can get the same amount of risk, but have more time to be right, obviously, you always want more time. And I was just looking at the down move. It's down in the expected volume, and volume decline. I'm like, hey, I think we might get a bump up. And, honestly, it's a little bit early on jumping in on that, but we have, like, okay, there's a 5. Well, the 5 didn't break. Well, what about the 10? And I was looking at that. Well, the 10, it, right there. And it did break up a little bit right at the end. See, right there, it broke up. But it sort of fell on back down. Now, it worked fine for like a current at-the-money spike striker. I was going for a big spread, a long position I was hoping. And spike striker, I mean, the one thing about it is usually, it's a reversal to neutral. Okay? And we basically got neutral for the end of that hour. And then for the reversal, well, not so much. And spreads, obviously, you want a little bit of movement. You may only need 5, 10, 20 ticks, but you do want some movement because it's obvious. It's a variable payout in the stream where you buy and where you sell is your profit. Okay, well, hopping back on topic to wrap up in these last couple minutes, just wanted to show you the comparison of the example from yesterday. And so looking at that comparison side by side, and what we got on it right here was, I'm going to do it. We got it. Okay, so we put them side by side. And the net result on the trade, if I can get it to show, you know what? I'm going to have to do it tomorrow. So we're not going to have time. But tomorrow we're going to go over comparing side by side the spread versus the future and how the two would turn out differently. Okay? Y'all have a great day, and I will catch you tomorrow right here on the Diagnostic Trading Hour.